over some of our latest research. A quick survey of the trades today are about minus 755. Still 5 long NASDAQs open. And we're not going to go over all the trades. We're in research mode. We're not trading live right now. We're doing research. And so try to publish the research. Spend a lot of time going over a lot of things. And so I'll just go over the highlights. But for the trades, you see about minus 755. This updates on an end of 1 minute basis. These are our portfolio money management algorithm indicators. I've added 2 additional ones that I'll upload to the members area, the money management open equity and the money management drawdown. Now this is the daily P&L that we've been plotting. It shows the intraday daily P&L. This open equity is the longer term P&L since the beginning of the chart going back 3 years. Shows 1.6 million trading this setup, hypothetically speaking, on this money management algorithm. The drawdowns are, since the last equity peak, it is 30,220. And this is based on the 1 minute versions of the strategies, which are a little bit different than the mix of 1, 5, and 15 minute that we're using. So looking at these analytics is helpful to me as I continue to go and research these setups. And so let's look at the main research I want to share with you today. So I'm looking at the average true range of the VIX on daily charts going back 14 days, and what you see here is 1.14 is the average daily range of the VIX. Very narrow range. There's lots of different ways to measure the VIX, the actual value of the VIX. But this is the average daily range of the VIX. Since 2023, you can see here is the beginning of 2022. Higher values. 2021, the lowest value was greater than the current range that we're in now. And then in 2020, obviously a big spike up in those average daily ranges. And 2019, higher than we're seeing now. 2018, mostly higher. There's a few times when it's touched these values that we're at now, 1.14, and then 2018, there's a time period when it was really low, but it had some high. And then 2017 had about an 8.5 VIX all-time low right in here, or actually it was in November of 2017. 8.5 VIX all-time low, 8.56 I believe, and pretty extreme. Let's and if you look at the where this value 1.14 is, it's right in line with 2017. So look at the average daily ranges of the VIX is that we're at 2017 levels, which is the lowest VIX of all time. Pretty extreme considering the fundamentals, higher interest rates, and the market shows very little, just a lot of apathy, I guess. When VIX is low, there is a perceived low level of risk. There's not much of a desire to hedge the options, and so there's a very passive nature in this market, and so it doesn't seem right, but the data tells us this is what's going on. And so we have to look at this, and we have to look at some of the things that would be profitable in this low VIX environment. Is this just a starting in May, did this just dip down really low for the summer, and will it rebound in the fall? And if it does, when? Maybe October, Q4 is what I would anticipate. But 2017, when the market doesn't move much, it's difficult. You have to sell option premium or take some counter trend trades. And SR counter trends are one of the things we're looking at in all markets now that VIX is so low and these markets are really going nowhere. If you look at a lot of the commodity markets like crude oil and gold, they're really kind of range bound overall in 2023. Gold went up and it's come back down and hasn't moved a lot in 2023. So here is the portfolio calculator that we updated as of Friday through September the 8th, and you can see that we're sitting at a worst case drawdown in this setup right here. Just took that right there, and it was down about 4K at the open today, rebounded to go positive, but ended down on the day a little bit recovered pretty well, but still ended down on the day, so that increased the drawdown right here. The max drawdown and the current drawdown would go up again today, and over the last several months, these low VIX environment has made it difficult to really capture any moves. And so what has done well, let's look at the SR counter trends. SR counter trend conservative portfolio, and then the SR counter trend V2M setups is something that I was also looking at. So, it's something that didn't do as well. A lot of these strategies, a lot of these markets struggled during the pandemic, harder to trade, but this particular strategy, when you update it, is at a good entry point. You can see that. It's at a good cyclical drawdown to start trading, and it's up $800 on the month as of Friday. I'll have to check today's results. And so I haven't been trading these markets in particular, mainly the stock indexes. So these are SR counter trend strategy, SR counter trend 2 V2 1M and SR counter trend 2 V2M 1M. So they're 1 minute strategies on the S&P, on the NASDAQ, gold and silver, crude oil, natural gas, and even coffee. So this type of VIX environment has been ideal in the past for this type of trading strategy setup. Let's look at, let's say, 2017. So up 21K in 2017. It's not a lot of strategies. It doesn't take a lot of trades. But 2017 was the best year that you see in this conservative portfolio. So if we go to a 2017 type year, we're used to seeing much bigger numbers. But keep in mind, this averages about 15 trades a month, while the stock index portfolio, sometimes we're taking 15 trades per day. And so it doesn't trade as much. It's very selective, and it has the potential to recover from this drawdown. No guarantee, obviously. Past performance is not indicative of future results, but that is one potential thing to add to the trading, as well as overnight strategies. We traded more overnight strategies back in that time frame, like Night Trader and some of those. Here is a setup that includes a 60-minute breakout ES, after hours, Asia 4 long, and Night Trader, and it also includes one NASDAQ strategy, one of the 60-minute breakouts, and this is what it looks like, and during high volatility, it went through a drawdown, and since September of last year, 1 year, it was in about a $60,000 drawdown, and we haven't been trading this one, and it's recovered. It's up here at this level, so it's up about 45,000 in the past year. And so since September, if you look at October, November, December of last year, that was 30,000, and then this year it's 24,000. And so if you count October, November, December last year, and then through this year through Friday, it's in a 3-month losing streak, and it was up 24,000 on the year. So up 54,000 in a 12-month period, just trading 5 overnight strategies. I prefer day trade strategies, and so I'm not adding those. This is just simply research right now. But when you have a low VIX environment, you have to consider holding positions longer. It's difficult to hold positions for a very short period of time in a market that doesn't move much, and so sometimes you have to hold positions a little longer in that environment where the ranges are extremely narrow. So all positions are closed out. Now you can see about minus $1,115 based on the 1-minute versions of these strategies. And looking at the portfolio money management algorithm analytics that we have here, this is just one of the indicators that we have, and we use this data to trade, potentially trade, still doing research on trading on different variations of our portfolio. For example, had we traded the average entry price today, it would have taken this trade, stopped out, and then taken these trades. And so you get this stealth rally at night. This is a stealth bull market environment with the low VIX, and it goes up at night and it pulls back during the day. Looks like it's going to go nowhere, and then it's really quiet, and then it kind of goes up when you least expect it, and then sideways into the close, If you're waiting for a breakout to take the trade, then you jump in here, and then it doesn't go anywhere. It kind of goes sideways. It kind of tricks you. Counter trend at the open, sideways during the day, up during the quiet time, and then sideways at the end of the day as well. And then wouldn't be surprised to see it go up overnight. No follow through. So this is the stealth bull market environment that we're talking about. And so these up overnight patterns, you have to catch them with overnight strategies, anticipating this stealth bull market rally. And let's look at the results of this strategy. It's done better than the portfolio. The portfolio is in about a 26K drawdown, I guess. This one is in about, it was up at 703.060 was the max peak. And it's at 690, so it's at 13, about almost the $13,000 drawdown out of 17. So its risk to worst case drawdown is about 5K. If you trade the average entry price version of this, these signals get turned off because I have backups on this, and so they get turned off at night, so I don't get around to turning everything back on each day. So I'm researching a lot, and so I've looked at the static setups, looked at buying on $3,000 and $4,000 drawdowns on our trading system's equity curve, and since mid-May, it's actually done pretty well, starting with a $3,000 drawdown. So in June, July, August, and this month, these are better results. June's not better, but July, August, and this month are better. Starting in a drawdown, more in a $4,000 drawdown or a $3,000 drawdown, and then exiting at the end of the day instead of just trading the whole day. The open has been volatile, and a lot has been lost at the open, and so that is this is just trading that, waiting for the drawdown intraday. Not as good as the regular strategy overall. Let's look at the regular strategy on the static equity curve. So here are the results through Friday. What you're looking at is the equity curve from this indicator. So this daily P&L equity curve represents buying this portfolio at the open and selling it at the close. And these are the results when you do that. All trades are long because you're trading the portfolio. In order to take a short trade, you'd have to take the opposite trades that are in your portfolio. And so that's obviously something that could be done, taking the opposite of all your trading system signals if the portfolio was doing poorly. But this is just trading our portfolio as is, taking each day. This represents many trades, and what we're doing here is we're just taking a look at it on what it would look like on a day-to-day basis. If you traded your portfolio at the open and sold it at the close, that represents one trade. In reality, you're taking many trades intraday, and what we're trying to do here is to match the portfolio calculator, but on 1 minute charts. So the reason we do this is we want to test intraday things like stop losses for the portfolio. So if you have 17 strategies here and 17 strategies, let me get the pin out. So you have 17 strategies in this workspace, 17 strategies in this workspace, and they're all sending information over to this workspace. And well, these other workspaces right here, they're creating this indicator, and they're generating an equity curve. And so what this would do would manage the portfolio as a whole. Instead of running 34 strategies separately, you're running it as one strategy in this setup. And so it's a portfolio money management algorithm, and you can test a portfolio level stop loss and profit target with this. And so that's what we're doing in our research. In general today, the highlight is the VIX is at 2017 levels on the average daily range. And so we are looking at strategies that work in 2017, or waiting for it to break out of that range so that we can more effectively and more efficiently trade instead of burning up capital chasing a market that's going nowhere. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.